right. Okay, I think we are good. So good afternoon, everyone, and thank you for taking the time to come out to the presentation today. My name's Shawn Allen, and I just want to talk to you guys a little bit about something that's dear to me, private mortgages, and a lot of people are trying to get into the space right now. And I think it's very important that we have a candid discussion today, just going over what's happening in the market and some of the regulatory changes, some people that are in private mortgages right now, some underwriting techniques, some issues with regards to debtor and creditor remedies, risk mitigation, and a little bit about some private funds. So I just want to go over a little bit about myself for those of you that don't know. Who am I? It's Shawn Allen. That's me on the screen for those that don't know what I look like. I've been in the mortgage industry for quite some time. I started out in 2002. And at that time, we were going through, a whirlwind. At that time, it was very easy to get deals done. There wasn't as much regulation. It was kind of like the Wild West. And then after time, the market started to change. I'm the founder of Matrix Mortgage. I started out with Matrix in 2008. I built it in 2008, right at the height of the global financial crisis. And we went from regulatory, minimal regulatory guidelines into a lot more stringent underwriting practices, which are holding true up to today. In 2017, I started CAPL, Canadian Association of Private Lending, and also I'm a director of the Scarborough Business Association. I do a lot of community engagement, trying to help small businesses in the area, not only in Scarborough, but all over, actually, just trying to help people grow their business. And it kind of morphed into something very, very special for myself. In 2019, the Raptors won their championship, and I did a lot of traveling with the team. I was, flying back and forth to Milwaukee, to Orlando, to where else was there? Philly, and I realized that those ticket prices, if you guys remember, were like $1,000 for the nosebleeds. I was like, something's got to give. So we went and booked up the whole basketball court and had a whole bunch of kids, 300 kids on 3 days' notice, come out to play on the OVO court at Scotiabank Arena. And that was the start of Matrix Care's community projects, trying to give financial literacy and financial training to a lot of people, not only children, but families too. They're going through a lot of hard times, not knowing how to get into the market. So that's where Matrix Cares comes in. We just did a nice activation with MLSC at BMO Field. We brought 150 kids on the field to bring out the flag and sing the national anthem with the players of the Argos. So that was a great initiative. We did a bunch of things through COVID, drive-through movies when social distancing was a thing. Everything was closed down. We did a couple of drive-through movies, and we raised funds for Matrix Kids for these after-school programs. So a lot of good stuff there. That's kind of where my passion is right now, in addition to private lending. Five-time Broker of the Year for private lending. It's a testament to the team and everyone here at Matrix Mortgage. 2018 to 2022, we got recognized through the Canadian Mortgage Awards for that. Two-time top 100 mortgage professional, world mortgage professional. So that's another nice honor. And I'm doing a podcast on the Curious Cast Network, which is a Bell production on crypto mortgages. So Crypto House is the podcast. You can check that out on Spotify and anywhere you're streaming your podcast. And that podcast is touching on, fraud mitigation and risk securitization. There's a lot of fraud happening in the industry, and I'm going to talk about that today. But my thought process is if we get mortgage transactions listed on the blockchain, a lot of that mitigation, fraud mitigation and risk would be eliminated because, the blockchain technology is immutable. And, when you have things stored on the blockchain, it's very safe. And I'm not talking about, making money on crypto and currencies and things like that. I'm just talking about the technology of the blockchain. That's kind of where we're going with that. And 2 weeks ago, I got nominated or inducted into the 2022 Scarborough Walk of Fame. I'm from Scarborough. For those of you don't know, Scarborough's in Toronto on the East End. Some other notable people that have been inducted into this Hall of Fame are Gary D, who's the host of Family Feud. Lily Singh, big podcaster, got her award with me as well. Um, Mike Holmes got an award there as well. So there's a lot of good people that are getting recognized, and I'm privileged and honored to be recognized in that realm as well. So that's enough about me. Let's talk about what we're here to discuss, which is the consumer needs of private mortgages. So there's some regulatory changes happening, and FISRA, for those of you that are in Ontario, I know there's a few people out of Ontario as well, but this is mainly for Ontario. And I do believe this is going to stretch across the country if everything goes well with this launch in Ontario. I have a a great feeling about that. But FISRA is implementing a new class of licenses, and the objective for the Financial Services Regulatory Authority is to contribute to public confidence in the mortgage broker sector, to promote high standards of business conduct, and to protect the rights and interests of consumers. A lot of people are getting into the private mortgage space for various reasons. At the same time, we want to make sure that we're doing it correctly. We want to make sure the investor from the suitable. So we want to make sure that we're doing that. So private mortgages that players, but given that they are not underwritten the same way as those as traditional financial institutions, mortgage brokers and agents must have the appropriate expertise to their needs. And I am a no. New regulations coming in, and I just want to give you guys some timelines for that. So in April 2022, the government and FISRA implemented some new licensing classes with enhanced education requirements for brokers and agents working in the private lending sector and raising capital. So, with this new initiative, the government is trying to support a direction to introduce licensing categories that better respond to the unique practices required by certain segments of the mortgage market and enhance competencies in the mortgage broker sector to better protect consumers. So, mortgage brokers, including principal brokers and agents who wish to deal in mortgage lending or private lending, should take note of some following dates. So, April 21st is the new licensing class. That's when the new licensing class comes into effect. So, that's April 21st, 2023. No, it's still on the same side. Yeah, we're still on the same side. Yeah. So in 2023, they have a private mortgage challenge exam. So early 2023, by October 31st, they have a deadline to pass the private mortgage course and challenge exam, and then March 31st, 2024 is the deadline to complete the private mortgage course. So with I'll put that up as well. But the new mortgage agent license and enhanced mortgage agent and broker requirements support the following outcomes: education and competency to better align with the activities in the mortgage market, enhance consumer protection as borrowers and lenders, investors receive appropriate levels of information and recommendations to make informed decisions relevant to the mortgage market. And this is paramount because you want to make sure that you're giving your client the right information. You have to know your products as well as you have to know your lenders. Sometimes people are put in private mortgages when there's alternative lenders that offer P&I payments that are institutional, but they just don't know that those lenders exist. So you may be doing some harm to your client by putting them into a private mortgage, not knowing that there's a better solution out there for them. So this is very key. I see a lot of this happening all the time where people are just stuck into a private mortgage when they have no business of being in a private mortgage, and that comes down to education. Enhance confidence in the mortgage brokering industry as licensees are prepared for their career in the mortgage broker sector. There's greater concern for the exit strategy in this scenario. Extensive due diligence, doc review, in-person meeting, document verification, and asking the right relevant questions is paramount to ensure that we have confidence in the mortgage broker industry. The last thing we want is to put people into private mortgages that are not suitable for those mortgages and they don't know the inherent risks associated with that. So I just want to go over a table just to touch on the important dates and some of the guidelines that are coming in. So right now they're moving into a stage 1, stage 2 licensing process. So the level 1 mortgage agent would technically be everyone as of April the 1st, provided that you haven't taken that challenge exam. So no experience necessary. These are new people coming into the industry. They have successfully completed the mortgage agent level 1 training course. They applied for the mortgage agent license within 2 years and have successfully completed the approved education program. The mortgage agent level 1 education program consists of just the mortgage agent level 1 approved education course, and there's a lot of institutions that offer that. My good friends at RIMIC offer that. MPC offers that. Simba offers that as well. So there's a lot of outfits that are out there that offer that. Now, the level 2 training, there hasn't been an official announcement as to who or what entity will be offering, or neither curriculum that has been put out, but look forward for something like that in the near future. But I'm quite sure that all of those entities, Simba, MPC, and RIMIC, will definitely be at the forefront of providing those educational means for you to meet that requirement to be a level 2 agent. That level 2 agent, and level 1, would not a level one agent would not meet the educational requirement to trade in private mortgages. However, the level two agent, based on all the criteria, has been in the industry at least 12 to 24 months as a level one agent, completed the level two exam or challenge exam, and they're licensed for 2 years. They would meet the education requirement provided that they pass the course to not only do traditional financing with institutional lenders, as well as private mortgages. Mortgage brokers as well. In order to be a broker, you have to have at least 24 to 36 months experience as a level two agent, completed all the necessary courses, and then you would have all of the experience to be a broker. And I know a lot of you would have questions on this, so let's save that to the end. But this is where we are going with the legislation right now. I'm just giving you guys a head of why we are making this change is there are a large amount of errors and omissions claims tied into private mortgages, and this affects me as a broker. It affects all of you as brokers and agents. It affects the lenders as well. The reason for this is, and I think, is because of the lack of education, and there has to be a standard. And I've been pushing for this for quite some time, to have a standard set of terms and a standard set of documentation and a standard set of rules with regards to adjudicating private mortgages, because a lot of people are getting hurt. They're getting put into mortgages that are just not suitable for the clients, and there's no defined exit strategy. So the key principles of the Mortgage Broker Regulatory Council of Canada's code of conduct stipulate that you want to have competent regulated persons must maintain the skills, knowledge, and aptitudes necessary for their business activities. They should decline to act when they're unable to provide products and services in accordance with this act. And I'm a firm believer of this, because a lot of times we're getting deals that other brokers are putting together, other agents are putting together, and we're scratching our heads trying to figure out why were clients put into these mortgages, whether it's, they're consolidating debt and the debt's at, 8% or 10%, and then they're coming in with interest rates of, 20, 30%. It just doesn't make any sense to me. Or they're putting into mortgages that just don't align with the exit of their first mortgage. It just doesn't make sense as well. So we want to make sure that we're providing mortgages that are suitable. Suitability is another key factor. And for those agents and brokers that are doing mortgages right now, do be on the lookout. I think fiscal is going to be really coming in hard looking at suitability of mortgages for audits coming in the next 12, 18, 24 months. We want to make sure that we're putting products and services together for clients that are suitable. So regulated persons and entities must take reasonable steps to present products and services that are suitable for their clients, and they must have a sound understanding of how the products and services match the disclosed circumstances of their client. And I have some documentation that will help you in getting the reasonability and suitability test established early in the mortgage stage, so that you could successfully meet the standard of determining if a product is suitable. And I have some documentation for that. I'll share that with you in a bit. Disclosure as well. Regulated persons and entities must fully disclose material information to be applicable parties in the transaction, and disclosure must be meaningful and made in an honest and timely manner. And I think the disclosure needs to be made immediately within the first 10 minutes of having a conversation with the call. That's how we operate here at Matrix Mortgage. We provide that disclosure up front, and I have a template of how that would look for you as well. And I have a survival guide that I'll share with you. And all of this disclosure, suitability, competence is all part of the risk mitigation mechanism. And I just want to make sure that everyone knows their role and responsibility with determining and mitigating risk. You want, as a mortgage professional, you should be at the forefront of mitigating risk. You have to be the one that's validating the mortgage or making sure the IDs are correct, making sure the bank statements are correct, all of the documentation, all of that stuff needs to be mitigated at the forefront of the transaction. In private mortgages, the number one piece in the 5 C's of credit, and I know you guys may or may not remember what they are, but collateral is the most important piece in a private mortgage transaction. And you want to make sure that that security is sound. You want to make sure that the property is there. You want to make sure that it's a property that's marketable. You want to make sure that you're using an appraiser company that's reputable and that's used by all of the parties involved in the transaction. You want to ensure, again, suitability is coming up. But more importantly, you want to establish a sound exit strategy. And that sound exit strategy isn't that you're going to get paid $3,000, $5,000, $10,000 at the end of the transaction. When you initiate the transaction, that transaction or that relationship is just the beginning. You have to maintain your relationship with that client over the life of the mortgage. So any situation that comes up in your AIR disclosure, whether you're the broker of record or the agent, the broker of record has to report to fiscal if there's any defaults, if there's any power sales. All that stuff reflects on the AIR. So you as the agent, you have to make sure that you're putting your clients in the best solution that has a sound exit that they can afford to pay, or else you're putting yourself and your broker of record and your brokerage and all your peers at risk. So you want to make sure that you're making a sound effort to disclose and have that exit strategy in place. So I have some examples of that as well with sound exits. For example, a lot of times I get calls from brokers that say, oh, can you go to 90%? Can you go to 85? Can you go to 95 on a private? And I'll tell you something honestly. What's the exit strategy? Most of your exits in privates traditionally would be to exit them out to a B lender or your homes, communities, haven trees, and the likes of those. Very rarely selling is an option as well. But for the most part, those are some of the exits. So if you're going to exit to a B lender, how are you going to exit to a B lender if you're putting a client at 95 or 85 or 90% when those other institutions only refinance up to 80%? So you have to be mindful of the market conditions because at the start of COVID, a lot of those institutions went to 65 and 70. And if you're there trying to push somebody into 80, 90, when those institutions only go to 65, 70 or 75, you're doing a disservice to your client and there's no sound exit strategy established. So you want to make sure that you not only know your privates, but you know the alternative lenders to get your clients out of a private as well. So that's crucial in the underwriting process of private mortgages. And Capital is my private institution. It's a mortgage administration company regulated by fiscal. And we always look for alternative financing and flexible alternatives to more traditional financing options. And some of the key functions that we cater to are ensuring, and this is not only us as the underwriters through Capital, but our legal team and our appraisers that we work with. We ensure that we're providing proper security. We're doing those title searches. We're ensuring the mortgages are registered in either a first or second position. We're doing lien and writ searches. We're ensuring that there's no tax deficiencies or arrears. And some of these key functions that we're doing, we rely on you as the broker or the agent to provide that information to us, whether you're getting the tax returns to confirm no taxes owing, And there's a lot of reasons for that, or if there's a super priority tax, or if there's a construction lien. We want to know all of that stuff up front. If they're doing construction, we want to know, we'll do a search to see if there's any construction liens, because that would go into first priority over and above the mortgages. So there's a lot of hidden nuances in behind doing private mortgages. So you have to be mindful of what's really transpiring in a lot of transactions that you're doing. You want to ensure that the mortgage instructed to the borrower's lawyer, registering the mortgage on title, recovering the mortgage investment, and again, mitigating the risk. Another key important factor is title insurance. Title insurance provides additional protection to the mortgage lenders. Examples of protection include outstanding work orders against a property, unknown planning act violation, mortgage fraud. That's huge right now, especially with the onset of everything going digital. There's a lot more mortgage fraud happening, leading to those errors and omissions claims and title fraud claims. So we want to make sure that we're doing enhanced due diligence. And in my survivor guide, I have a checklist that you can go through to ensure that you're doing as much as possible. And by no means is this a complete list, but it just gives you a standard for what to check to make sure that you're doing your part to mitigate against fraud. You want to make sure that there's marketability of title, and any defects in title otherwise not shown on a traditional title search would then be searched as well, giving the investor a great peace of mind. And this is more catered to people that are trying to get their friends and family to invest and not get title insurance. I think that's a big risk, and I think that you should really think twice about trying to get friends and family to invest, especially if you're not familiar with how to invest in private mortgage, or neither are they. I think you have to seek excellent and independent legal advice. We have a great legal team that is available to you that could provide a lot of support. But what happens when things go wrong? We have several default remedies. And those default remedies kind of look like this. The purpose of the lender's security becomes most evident when the borrower is unwilling or unable to repay the investment. A lender can realize the security in a few ways. Two of the major ways that borrowers default is they miss a payment or they don't pay out the mortgage at maturity. Another way that you could default is if you neglect to pay your insurance. Your home insurance is another thing that we see a lot of as well. But if a borrower stops paying their mortgage or repaying their mortgage on maturity, the lender may recover their investment via power of sale, which is a legal procedure through lawyers that specialize in the recovery process. And I just want to give you guys a timeline of what that looks like, just in case you're not too aware. But if a borrower defaults in a mortgage, such as a missed payment or not paying their mortgage on maturity, the borrower has 15 days to remedy that default. If the default is not remedied after 15 days, a statement of claim may be issued with the courts. The borrower then has 20 days to provide a defense. At that time, the lender's lawyer would also issue a power of sale notice. So that's, you have 15 to 20 days right there. Everything moves quickly in private mortgages. You're not going to have an opportunity to sit around, because a lot of times these mortgages, are in second position, especially. You don't have a lot of time to wait around on defense. So that's why things move pretty quickly. If no defense is filed by the borrower, the lender can obtain default judgment from the courts approximately 35 to 45 days after serving the statement of claim on the borrower. Once default judgment is obtained, if the borrower is still unable or unwilling to pay, a court motion is filed to obtain an order for the writ of possession, and the borrower is evicted, and property may subsequently be sold to recover the investment. So that is the power of sale timeline. And now, talking about some resources, I've put together a free private lending survivor guide. And in that private lending survivor guide, one of the things you want to do is join our LinkedIn group called Private Lending Hub on LinkedIn. And on there, we'll send you a copy. Once you register there, we'll send you a copy of the Private Lender Survivor Guide. And contained in this Private Lender Survivor Guide is the private mortgage intake questions. These intake questions are a list of questions that will guide you through what to ask your client to make sure that you're covering all bases to make sure that it's suitable. We provide a template for emails that should go out subsequent to talking to the client immediately after talking to the client so that you have everything fresh and documented as per the intake questions that you're going to send out and summarize to your client so you can provide some level of disclosure upfront on what you talked about with the client and what direction you plan to take your client in with the mortgage that you're offering, up to and including the amount that they're looking for, the value of their property currently as per their estimates, what debts they're looking to pay out, and the payments of those debts currently, along with interest rates, as well as what your mortgage that you're proposing is looking to do in regards to consolidating your consolidating debts, or if you're looking to, pay out a proposal or pay out some arrears. All of that is disclosed in that summary email, which meets the level of disclosure, in my opinion, for that client because you're summarizing your conversation. It has a risk mitigation checklist. This risk mitigation checklist will show you what to look for, whether you're looking at bank statements or letters of employment or, uh, um, what else is there? T4s. There's a whole list of things that it covers and what to look for to make sure that they are sound. And it has a client closing disclosure kit. That client closing disclosure kit just provides a summary of what was done. And these summary email and client closing disclosure kit go hand in hand because part of your closing package for your compliance, this kit you should have your client sign so it illustrates that they're aware of where they were when they came in, they're aware of where they are when they left you, and they know that the strategy to get out of the mortgage is defined in that client closure disclosure kit. Also, to documentation and keeping your client information in the CRM is paramount, and we can give you some information on that as well. So that kind of wraps up where we're at with uh, this present. To give you guys on November 1st, and a lot of the stuff we talked about here. We have some other key people coming in. Jim Terlucas is a mortgage broker and coach, talking about mining your database. So that CRM component is key. I'll be there. John Ryder is the head of Chicago Title, talking about mortgage fraud, and Daryl Singer is the head of litigation, talking about when mortgages go wrong at Diamond and Diamond. So that's another event I'm a part of, and we have a few others. Just you'll see them on LinkedIn, and please do join that LinkedIn group, Mortgage Private Lending Hub, and I will open it up for questions. Private Lending Hub. And I'll send out the actual kit that has all the dates in it as well. But this is just the criteria for each one. Yeah, they're implementing that as well. Most definitely. So I definitely see some risks in regular mortgages as well, especially a lot of those mortgages that were 80% and that were, taken out January, February, March, because those 80% are, 90% now, maybe even 95 with the way that the markets drop. So, there's definitely some risk there. And then people's earning powers have depreciated substantially as well. Their purchasing power has depreciated as well with inflation. So I do see a lot of people, having some issues, paying out those mortgages. But that's why it's important to have that, you know, guideline with, the making sure that the mortgages are suitable and making sure we know and account for, all the people that are contributing to any mortgages in the house. It's very important that we have a full picture of what's happening in someone's financial, toolbox to make sure that we're putting them into something that's sound and suitable for them. Yeah, that's a good question. So I don't know. Some people are saying they didn't hear the question, but the question was if when is it a good time to check up on your client? And it's a good time to check up on your client. In our CRM, we have a 30-day after the deal closes, 60 days, 90 days, 120, all the way up to 270, and so on and so forth. So I like to check up with my clients very frequently, and I like to build a relationship with my clients. I don't want to just do their mortgage and call it a day. I want to meet my clients in person. COVID made that very, very difficult to meet people in person. But now everything's opened back up, and I strongly encourage people to build networks within your network. Your clients should be a part of your network. You should get to intimately know your clients, when their birthdays are, know the family, meet the people, take them out for a coffee, take them out for breakfast. It's all part of the strategy of mining your database. And I think it's very paramount that you do that. Now, if you have clients that are out of town, one of the ways I like to keep track is with their birthday. I put their birthday in my calendar, and I give them a show for their birthday or their wedding anniversary. It's very, very important that you stay in touch with your client, because clients are finicky, and the world of the internet makes the world so small. So they can easily pick up the phone and call or talk to somebody else. So you want to make sure that you're staying in contact with your client as much as possible. That 30, 60, 90 is just a template, but as often as possible is the best answer for you. Yeah, right now, because the market is so unstable, we don't actually have our rates posted for more than 30 days, because the market's changing so frequently. And with the next scheduled rate hike happening in the next couple of days, we're anticipating a half a point, even a quarter, three quarters of a point rate hike on the variable rates. So it's very perilous times right now. We want to make sure that we're steadily staying abreast as to the changes in the market conditions. So, it's very hard to say, but staying abreast is very, very paramount at this time for sure. Mhm. Um, I think the rate increases right now in the private sector are relative to the rate increases that have been happening in the prime and all prime markets. Right now, you get a private mortgage, probably looking at 699, 799 and up. As a first mortgage, and depending on the loan to value, and private sector mortgages are, in that 999, 8999 and 9 and up. Starting at your 65, 70%. So the rates are definitely higher, but that's because the market conditions have changed. Inflation is higher. The recorded CPI inflation, I believe it's around 8 or 9%, but that's just the reported amount. The unofficial inflation, let's look at it. In 2020, when COVID started, March 15th, gas prices were a dollar. Gas prices today, with the Toronto specifically, are $1.62. That's a 62% cost increase in the cost of fuel. Um, that's inflation. I've seen something else where they're saying that Mastercard is allowing merchants to charge 3% or the cost of the transaction, the merchant fee, back to the consumers. That's inflationary. Food prices are up. That's inflationary. Back, back in the day. Yeah, right. So it's huge, right? And just think about it. Yesterday was Tuesday, okay? And if you think about Tuesday, well before COVID happened, and well before this whole inflation conversation was popular, but Tuesday was synonymous with what type of food, and I know you guys are thinking about it. It's synonymous with chicken, right? Toonie Tuesday. You know how much Toonie Tuesday is now? It's almost $5. You know what I mean? So that's food cost inflation is crazy. So, people are looking to get a return on their investment. So yes, the prices are up. Banks are looking to get a return, and then they're charging more because a lot of people are taking money out of their line of credit and then lending that out. So the cost of doing business is just higher for everybody. I don't know how it's going to sustain over the next 12, 24, 18 months. But the fact of the matter is the cost of transacting is up, right? Across the board, right? So I was looking for my flight for MPC next week. The flight to Vancouver is $1,200. I was like, it's expensive. You know what I mean? So so yeah, it's crazy right now. It's a lot of things you gotta be mindful of, and even in the news, you're talking about tightening your wallets. Everyone's trying to tighten their wallets, so we gotta just be mindful of what's happening out there. That's a good question. I'm not too sure, but I know that the delivery for the existing course is in person and online, so I don't think that that would change. I personally would like to host the course at my office, because I think there's something to be said about meeting in person. Like I said earlier, it's very important to have that in person feel. I was in a conference in Niagara Falls over this weekend. 1,400 people came out from all over the country to talk about investments. And I think it's very important that that meeting in person, that in person vibe is still maintained, because I think we lost it over the past 12 to 24 months, to 12, 24 to 36 months with COVID. So I'm a big fan of meeting in person. So yeah, definitely, I think that that format would not change with offering the course, whether in person or online. It's massive. It is massive to have an exit strategy, because that's the whole basis of having a private mortgage put in place for you, is to be in it for a short period of time and to have a predefined exit. A predefined exit is probably just as important or even more important than the mortgage itself. Because the last thing you want to do is put a person into a private, they can't get out of it, and then they're going power of sale, and they come back and put a lawsuit together to say that the mortgage wasn't suitable for them. And this has happened. So you want to make sure that you're putting your clients and doing your clients just service by giving them that disclosure and getting them out of these mortgages, because these are short-term fixes. The majority of the private mortgages that you're seeing out there are 1 year terms. Some of them are a little shorter, some of them may be a little longer, but 1 year terms are generally what the consensus is for these private mortgages. For private, you know what? I we don't do them at 90%, but I've heard of them being done in the past, and I've heard them being done in the past on purchases, more specifically pre-construction purchases, where they would go to 90% of the purchase price, given the fact that the property appraised higher, they would go to 90% of the purchase price. So those are some situations that I've personally seen. Because I don't really see too many of that happening, I can't really talk too much about that outside of my experience. But I don't really think private investors would want to put themselves at a 90% private mortgage, especially on a refinance or even for a purchase for that matter, in this environment, because the environment is deflationary. We still haven't gone through, a full cycle of these rate increases. And with the slower months coming ahead, December, January, February, the colder months, it's traditionally slower in real estate. I would be pretty miffed if I seen, people going to 90% in that type of environment, because I think that the values will be suppressed even further during that time. I think right now people are just not purchasing as much as they were in the past, because they're scared of higher interest rates. But with that being said, this is where the conversation needs to be had with private mortgages, because the private mortgage space is more traditionally set aside for people that are looking to refinance. Because in any market, up, down, left, right, COVID or not, last year there was 600,000 residential purchase transactions across the country, and at that same time, there's 6.9 million homeowners, and mortgage owners. Sorry, there's 6.9 million mortgage holders across the country. So there's a tenfold clientele base if you focus your business on refinancing. And the fundamentals and principles that I was discussing today were catered to those clients that are looking to do something with equity in their property. And that was the whole basis of the conversation and the presentation today. Was not really catering to people looking to buy. It was catering to people looking to refinance, which is a larger segment of the population. Through COVID, there was a backlog because there was a moratorium on power sales and evictions. But there's a lot of scenarios, and I think I went through that slide, and I could pull it up here actually. When default remedies, when things go wrong, here it is right here. You're looking at 15 plus 20 plus another 45 days, so 35, 30, 65 to 75 days would be the time frame. But then that's if the courts are available. You know what I mean? I think the courts are a little backlogged. I'm not quite sure how backlogged they are. Fortunately for Capel, we haven't had any, people go through the power sell motions. The underwriting team, cheers to them. Carla, Arlene, Sabina, they have, done a tremendous job in mitigating risk and making sure that we have sound exits established upfront, so that we can get out of the mortgages. And a lot of our mortgages are under 70%. So there is that predefined exit, at 75 or 80 with the Alt A institution. A lot of times people come to us for financing, because they just need a little assistance or a little guidance. A lot, and I find that the number one client that we have that comes to us is people that are self-employed and they don't have their accounting in order. And this is something that we're working on right now on a deal with a large bookkeeping and accounting software firm, to get them on board with us at a partnership so that we can go out and start offering those services to the self-employed clients that are just going out there doing their job, doing their work, making their meet, but they don't have any clue how to do the accounting, which is hurting them because now they're forced into private mortgages when they have great credit, they're paying their bills, but they just don't have good accounting, right? So this is something that we're working on in the near future to put together a program for people in that nature. But defaulting, a lot of times it's just education as well. There are other strategies that are available to people going through private mortgages, such as, partially paying some of the interest to lower their payments, fully prepaying the mortgages so that there's no payments, or giving them a 2-year term, to stretch out the structure of their mortgages by partially prepaying. So there's a lot of strategies out there that are available. And if you guys have any questions on that, we definitely have that conversation as well. Yeah, we actually built our own. We built our own. This is the Matrix Lightspeed CRM. And this CRM is more catered to the workflows that we have for the private mortgage segment. The benefit of our CRM is that it gives us all the touch points. Now, the the MCC CRM is fabulous as well for those that that for those that are in the MCC network. But for those that are not, the CRM that we offer, I could definitely give you guys a demo. You can request that when you're requesting that free private lending survivor guide. It just has a robust overview. It's tied into your cell phone. It's it has a call. We have a call center that works with you, that pre-screen clients, and they go through the lender intake questions. All of that stuff is all encompassed in that platform. So it's really a brokerage in a box for you. All the compliance forms are there, all the disclosures are there. It just makes it a very, very sound experience when working in the mortgage space, in the private mortgage space specifically. Yeah, we have quite a few. Yesterday we did a intro session for our Caribbean real estate cruise. We're doing another session coming up in later on this month. We have the mortgage summit. We have the mortgage roundtable with Diamond and Diamond on November 1st. We have the mortgage summit on November 27th. We have our very popular holiday social, and all of this will be on the LinkedIn Private Lending Hub chat group on LinkedIn. So Private Lending Hub, please do check that out. That's Private Lending Hub on LinkedIn. And all of the information will be there, including the CRM information and the survival guide. But that's where we post a lot of our stuff. I think we have around 1,500 members on that group right now and growing. And that group is, all over Canada and the US. And we're looking to expand it as well. So just to make it more international. But we have our very popular December the 14th holiday social at Scotiabank Arena. This is something that you don't want to miss. This is where you're going to see your investors, your developers, your insurance, your all different, like your marketers, everyone in one room. All the suites at Scotiabank are booked out, and all this. If you guys haven't been there in a box, this is the ultimate in a box marketing, where all the boxes are booked and linked together. So you're just walking through, meeting people with strategic introductions. The link for that will be in the group as well, and I would encourage everyone to come out to that. And you get to watch the Raptor split. And we have a nice big after party. Last year we had it at Harbor 60, which is directly across the street. This year we'll have it, probably somewhere else because they're doing construction over there. But it's a great event to network, and I'm a big fan of networking. I think networking is important. Your network is your net worth, so you got to definitely work on building that out. And yeah, stay tuned for everything else. We'll put it all in the chat so you guys can see it. All right, thank you. Have a good day. All right, thank you.